Hello everyone and welcome to 2023. This is Macro Cafe episode 1 of this year. And I hope everybody had a great New Year celebration. I haven't done, a video in the past, I think, couple of weeks regarding kind of the macro perspective, where everything stands, how we kind of closed off 2022. So I thought I'll put one out today, even though it's Monday. It's an off day here from the market, so I had a little bit of time to take a look at the charts and see where things stand. We're basically going to cover from, more of a 20,000 feet view. The S&P 500, we're going to take a look at the NASDAQ, Dow 30, a little bit of a look at the 10-year yields. Then we'll take a look at the dollar and close it off with Bitcoin. I am your host, The Cowboy. This is Elliott Wave Cafe. Let's get started. Alright, well, if you have nothing else better to do and you're hanging around on Twitter, like I do, you can come out here and follow me at Elliott Cafe. You might pick up a thing or two, interesting discussion, charts, things that I see in the market, opportunities, and different stuff that I like and I want to comment on. You can find it in there. The followers here keep growing, and it's a nice place to kind of hang out. You can also find me on my private trading room on Telegram. You can go ahead and put this link in your browser, and that will take you to this bot. And this is everything that I'm offering up there. You can take a 2-week trial if you want to see how this fits you. But we're covering a lot of markets in here, and I do, morning chart presentations, end of day videos. We're pretty active on the chat room as well. And, we're talking about Bitcoin, alts, everything else in the markets. So go ahead and check that out if you want. All right, let's begin and take a look at the S&P 500 here. I have a couple of things to show you from a longer term perspective. I still think we're in a pretty, decent, I say, secular bull market in here. We've had, one of the largest corrections here maybe since, maybe even 2008 in terms of depth and duration. We all know what happened up here with the COVID crash, but, this one was pretty choppy, kind of overlapping. A lot of volatility. A lot of these candles in here are double, if not triple, some of the candles that we've had in some of these, previous bull markets and rises in price. So high volatility, corrective type price action, at least for now. And we're looking at least for one more leg lower into the S&P 500. They tried to rally this market about 4,100, kind of starting in October 13, somewhere around December 13. A couple of months later, that rally here started to fade, and then we have been correcting for the whole month of December, and we closed, quite bearish here as we finished 2022. Until some of these previous swing level highs are getting taken out, I have no reason to believe that this market is forming anything bullish. So I will continue to stay, with the downtrend in here, because you can see we have a series of lower highs and lower lows, and there's no evidence yet from price that this market is turning. We will continue to monitor that every day with our members, but so far this seems to continue to point to lower prices. Some of the targets that I'm looking for to the downside will be the 61.8 retracement of this latest rally at around 3,200. I think this is on the arithmetic scale. What you're looking here is the log scale, but the fib is based on the arithmetic, and I think it should be pretty close on the log scale as well in terms of fibs. I do have an alternate in here just in case this market has finished selling off and you're having this second wave primary finished instead of this A. So you would be an ABC, wave 2 will be placed back in here, and now we're beginning the next advance higher. Again, for me, it would be very important that we would get an impulse, and this impulse would overtake B wave to start to consider that this market, it's got bullish momentum and it can look to new all-time highs in here. Until first this wave 1 gets taken out and then this B wave, I really have no reason to jump on anything bullish. If anything, the momentum continues to be lower. We have quite a bit of degradation, you know, in the breadth indicator. We're continuing to look at those every single day in the pro room, just because there is, you know, a lot of stocks here that have to participate for this market to continue higher. You can see that lately, you know, some of these major stocks like Amazon, Tesla, Apple, you know, a lot of these kind of large caps have been taken down, and that's been pressuring the markets overall. So this is the main count that I'm watching, keeping an eye at the same time on this alternate development. Let's take a look at the S&P 500 here. I mean, the yearly close was pretty bad. I mean, we had a little bit of a pullback as we were kind of finishing off the month of December, but still this formation in here, it's super bearish. We've had you know, about a 13-year bull market in here since 2008, 2009, and you know, the market kind of gave you a nice little hammer, and then it was led by you know, by a pretty strong bullish market. You could see that there was another hammer in here, but every time this kind of appears towards the top, we consider that to be more of a hanging man, which is a reversal pattern. Now, it was followed by you know, a bullish year in you know, 2021, but in 2022 this trend kind of got stopped into its track, and you could see 2022 how it almost engulfed completely the previous year. So to me, this is a pretty bearish development. It would take you know, another pretty strong 2023, or if anything, a little bit of a pause here to start to consider that we should have more upside momentum in here. I'm taking a look at the monthly time frames as well, and you know, they tried for the month of October and November to get a little bit of a rally in this market, but then the bears came back and said, I don't think so. You know, we're still having a lot more black candles here than white, and that suggests more of a bearish momentum. Maybe one little ray of sunshine in here is if you look at the RSI, we're approaching 40 on the RSI, which is usually a pretty good support on uptrends. If you're dipping below the 50, which is kind of where the markets usually retrace to in pullbacks in a bull market, and 40 is kind of the last defense line here for the RSI, and we've had we didn't quite touch it, but we've had those couple of months of bullish price action since then. So we're pretty much kind of stuck in here in a range near 50 RSI. We'll see what the resolution will be as we're beginning January and February. But if you know, if this is you know, any indication is that bears have already kind of taken the charge back from the bulls, and they should have the upper hand kind of going into the month of January in here. Let's take a look at the Nasdaq. I'm going to take a look at the candlestick analysis here as well. If you look at the yearly, you know, you had a pretty bearish year in here. I mean, it's the first kind of massive black candles again since 2009 lows. And I would be very surprised if this would completely reverse and push to new all-time highs in here without first at least moving sideways, if not continuing lower for the next several years in here. So based on what the bears are telling us over here is that you know, we should not expect a lot of bullishness following this candle. I could be surprised, it's true, but you know, after a 13-year, 14-year uptrend in here, I doubt that you know, we would just completely push back with just this kind of small bearish candle being present. I think there will be at least several kind of following this one. You can look in here at the monthly time frames as well. Same like in the S&P 500, the bulls kind of try to recover from here. We'll take a look at the counts, and there's some important fib zones right there. But the bears have taken charge again. Onto the RSI, we're kind of hovering just above 40 support in here. And if this market is to turn, this needs to hold, and they need to kind of get into the month of January and engulf this one, if not overtake it and move towards 13,000. We'll see kind of how that develops. The count on the Nasdaq 100 remains pretty bearish in here to an ABC to form the first zigzag of this decline, followed by an ABC and an X wave. Then you have another A wave decline impulsive with a very you kind of soft rising here in a B wave, a lot of chop and overlap as well into the trend line. And you could see that we're now very, very close to overtaking this 10,440, which are the lows from December in this market. Now, again, one important thing to mention is that the 61.8 on an arithmetic scale sits at about 10,589, which is just slightly above this 10,440. So it provided support, and I'm talking about the fib from the COVID low here to the top of this wave 1. And that's been holding very well. The next 61.8 on the log scale comes in at about 95.74, so that's just on a percentage decline, which would be, the next kind of sell-off in the C wave. Now, I want to tell you that the moment this A wave low gets taken out, we have kind of satisfied the requirement for a C wave, and we can bounce anytime from there. But the markets here continue to look weak, again, on the yearly, on the quarterly, on the monthly, and we'll see what kind of recovery they're able to stage in this kind of first quarter, with the earnings coming up fairly soon in here. So until we're overtaking this B wave, and even more importantly, this kind of X wave high in here, I don't have no interest in getting bullish this market. Kind of trying to pick the lows in here, I think it's a dangerous game. There's no evidence, again, from price, from candlestick analysis, that this market, it's about to reverse in there. We are getting maybe slightly less declines and slightly less 52-week lows in this market, but not at the rate that I think suggests a low being formed that I'm talking about, that kind of that breadth that's out there. So we'll see what the month of January kind of brings us. We'll continue to kind of stay on the bearish side for now. One more count that I wanted to show you here, a little bit of an alternate, is that this could be considered maybe a completely wave 1 cycle if you're changing a little bit some of these primary subdivisions in here. And that would mean, like you saw with that yearly candle, that we should be at least until, 2026, maybe 2027, in some kind of, for the next, 3, 4, 5 years, maybe, in some kind of corrective type price action in this kind of in this Nasdaq market, and maybe even on the other ones. And the way that would shape up, if this is a wave 1 cycle top, that this is the first leg of what it could be, maybe a complex correction, or some type of a zigzag, if this becomes a bit more impulsive than what it already looks like. So that correction in here would kind of take us towards 7,000 into the Nasdaq, where we've had the previous fourth waves from this kind of previous rally in here. So that's one of the ways to kind of look at it. The other one is that, if the market are completely turning from here and moving higher, that this is probably still a fourth wave. And this wave 3 moves up top. This is fourth. We're doing one more push, and then we're going to correct lower. So that's just a little bit of an alternate look that I'm kind of keeping an eye on, versus kind of what I've showed you so far in the Nasdaq 100. Let's take a look at the Dow Jones, because this one, it's been, kind of the strongest of all this indices in here, especially on the industrial side. We've had pretty decent rally, and a lot of those stocks have been making 52-week highs. You can see here on the monthly time frames that we have gotten rejected from that, I don't even know what the low was, just slightly above 28,000. Pretty nice bullish engulfing. It had a little bit of a momentum going into the month of November, but then just kind of fell apart. And December said, I don't think so. The whole idea here, is this a fake out rally? Is this just an X wave? Is this just a B wave of a flat? And then would it be followed by the next sequence lower? And that's what we'll be watching in this month of January, and see kind of how this develops. So the count would be as a wave A decline, then you follow in 3 waves in A, down in B to new lows, then a very sharp rally in a C wave. That completes this wave C out of B. There is, a lot of difference here between what's going on in the industrial and in the transports. We got some divergences in there, which is important to kind of see from the Dow theory perspective. And that would mean that, Dow Jones Industrial will probably travel lower here towards 24 to 25K, where we would have the 61.8 fib of this latest rally. And one positive thing could be that if you're bullish, and I will flip bullish in case this happens, right? You broke above this trend line channel and you're coming back and retesting it in here. And, if you're kind of continuing to climb above this high and even to some of these previous swings, I think that's going to be a pretty good signal that this market will continue to new all-time highs. So for the bears to continue to have momentum, we need to continue to sell lower. This month of January should be bearish, followed by the month of February in what could be a wave 1, a wave 2, then 3, 4, and 5, and that would be a wave, let's say, maybe wave 1 of C. So it would be 1, 2, 3, 4, 5 for 1, then 2, then 3, 4, and 5, and continue to drop lower towards the end of this year in 2024. So very important kind of what's going on here in in Dow Jones. Also, if you look at the yearly perspective, you had a pretty strong hanging man right in here. I mean, very, very long, followed by one more push to new all-time highs, and then another hanging man here for 2022, which is, in my view, not very, very bullish for the market. So that's kind of what we'll be watching. But again, just because some of these signs in here are telling us bullish, bearish, it doesn't mean that the market cannot behave in a different way. And if it's giving us signals here that it wants to rally, then discount will be abandoned and we will jump in more of a bullish outlook. In here, we have to listen to the market, right? So, you know how that saying goes, right? It's okay being wrong. It's not okay staying wrong. That's a very important thing to learn in trading. All right, let's continue and take a look at the 10-year yields in here. You can see this is a TNX, and we've bottomed, almost on a negative rate, although not quite, but here in March 2020, and then we've had a pretty nice rally in the 10-year. The yields continue to increase. We've hit highs very, very close to 4.5 in an impulsive manner in a 1-2 at the primary degree, then 1-2 intermediate, 1-2, 3, 4, 5. Very nice subdivisions of this wave 3 intermediate, followed by a wave 4 at about 253 in yields, and then with the final push up higher here in wave 5 of 3. To a very nice FIB projection of 261.8 multiple of this wave 1 and this wave 3. This kind of beautiful impulse structure here suggests that we are probably next in a fourth wave at the primary degree that should kind of stay between 23% and 38.2% of this latest third wave in here. So we're measuring, wave 3 here, and then we're taking the FIBS retracement into this fourth wave. Now, there was a moment that this could have been a wave 1, 2, 3, 4, and 5, but the yields have rallied here in December quite strongly, and even though we haven't got into the territory of the wave 1, I think it's quite unlikely that this is a 1, 2, 3, 4, and more than likely maybe an ABC. We're either maybe doing a big complex correction in here, or maybe some kind of a triangle, maybe even a flat at 3, 3, 5, because fourth wave have quite a different wave of forming than a wave 2. They can be a triangle as well. So and they usually are a little bit more complex. So that's kind of what I'm watching. I don't think we're going to move to new highs in here on the 10-year right away, but rather maybe just kind of climb a little bit and then fade away again and just build, maybe over the course of 2023, build more of a fourth wave type price action, which means more of a choppy market and not as directional as we've kind of had them so far, because Fed is already kind of suggesting that they could pause the rate increases or, just kind of go at a slower pace. We'll see that the 2-year already, it's kind of below the Fed fund futures. And that suggested that the Fed is probably gonna temper down here a little bit. It doesn't necessarily mean that we're turning to a bullish market, and we'll watch, kind of what's going on the recession watch, and all this kind of other economic indicators. And one of them is the 10-year, plus the yield curve. I mean, I talked to my members last week about the yield curve inversion, and that's, that's pretty deep and pretty steep what's happening even at a shorter duration. So if you look at the 3-month, 6-month, 2-year, everything is kind of inverted out there, and that kind of smells trouble for 2023. We'll see what's going on in there. Let's talk a little bit about the dollar as well in here. And this is a longer term chart looking back to about 73. You could see kind of its cycles, its swings, its highs and its lows. And some of these key zones that offer support and resistance, this rally back here in 2017, 2018, stopped just a little bit higher than 100. Then we corrected, as the Fed started to increase rates, we've had this strong rally all the way up here to about 112.5 almost. This was the high in the dollar was September 28, 2022. It's when some of those magazine covers started to come out, and we're calling that there is no end in sight for the US dollar rally. Sure enough, shortly after that, we peaked and we started to sell lower, and it's one of the largest monthly declines it's had in a while in here, and we're back towards this, let's say, support line at the moment, and I'm very curious to see what's going to happen. We're probably going to push maybe slightly lower, but then we should begin a little bit of a recovery, either in a wave B or in a wave 2, followed by, I think, the next decline lower. So this is what's happening on the US dollar, and I'll show you a couple of correlations in here. If you're into this kind of ARK ETF, I've been showing these charts before, where there's a high correlation between the dollar selling off and this ETF kind of pushing higher. The purple line is the dollar, and it's actually inverted, so you can see the correlation, or the inverse correlation, I should say. But what's very, very surprising is that even if the dollar sold off here quite aggressively from its highs, the ARK ETF wasn't able to stage a rally at the moment. Now, we could be coming into the final stages of the sell-off. There should be maybe some kind of a ending structure in here. No pure evidence from price that that's the case. It could take a little bit more time to base, but I'm very surprised that it hasn't rallied yet. So either the dollar here, it's going to go into the next rally higher, or this market is a little bit delayed, unless the correlation is completely broken. But you will see that on the next chart here as we're looking at Bitcoin. It's a similar story. Bitcoin is not able to rally, even though the dollar has been selling off quite strongly. So we need to listen to those type of messages from the market and figure out why in the world it's not happening. So Bitcoin here trades at about 16,007, maybe 16,008 at the moment. Purely just kind of flat sideways price action. I will talk about it here in the next few slides, but here is the dollar, and the shaded areas are periods of dollar strength and kind of how Bitcoin behaved. Definitely once the dollar started to rally, Bitcoin did almost nothing. It just kind of created one more marginal high and then sold off. And then ever since the dollar peaked in here, actually Bitcoin sold off a little bit more, and now it's just kind of stabilizing. So if Bitcoin was not able to rally with the dollar selling off in here, I'm not sure what's going on. But it's definitely not a signal that it's working at the moment. So again, either the dollar is pushing higher and Bitcoin will continue to sell off, or the dollar will stabilize somewhat and Bitcoin will start to catch up and start to rally. But quite a surprising price action in here from a big dollar sell-off without Bitcoin pushing higher. That shows you, I think, kind of the weak character still in the crypto market. Here is a look, a little bit of just a shorter time frame here on the daily, and I wanted to kind of show you the trend line here in the dollar that comes from these June lows. That's been kind of tagging along, and very important, and we're right here at the moment. Now the count from the highs here, it could be a flat here in a wave 2. 1 A, B, C for a 2, then 1, 2, 3, 4, maybe a 5. So maybe we're still in a 3. We should be doing a 4 next, and maybe another 5 lower. Otherwise, you run the risk in this being an A, B, and then some kind of a C down, and then you're moving to new highs. But either way, over the kind of the shorter time frame here, maybe over the next month or two, I think there'll be a little bit of a pullback here in the dollar to the upside, and I think that could pressure Bitcoin lower. That could pressure stocks for the next leg lower. Kind of based on what I'm seeing here. Now, there's no evidence yet that this is about to reverse the dollar, right? We'll continue to kind of watch price every day and do those updates. But, that's something that I think it's probably kind of coming down the line. So I'll be watching this like a hawk. And then I'm going to close off with Bitcoin in here, taking a look at the weekly time frames. This is kind of the main chart I'm watching since I'm looking at the move from the highs to the lows in here in more of an impulsive price action. You have two large corrections. You have this correction in here, kind of the beginning of the year, and then you have another correction here from the middle to the end of the year. And I'm labeling these as a wave 2 and this is a wave 4. If you want to move this fourth wave up to this high, that's fine as well. You can do then, you know, maybe an ending in a wave 5, or maybe some kind of a 1, 2, 3, 4, 5, 4, and 5. So there's still probably a few subdivisions lower before this decline kind of completes here in 5 waves, and that would be just wave A, and then we would get an upcoming rally in Bitcoin, maybe, you know, after we're finishing off January, maybe February. I know we have a couple of months here that are coming with some good seasonality for Bitcoin, and we'll continue to watch those with the members. But it's, I think that once we get kind of a final push down, a final capitulation in alt and Bitcoin, then we would be able to enjoy a little bit of a rally here that could be, you know, 38 to 40, maybe even 50% of this entire decline. So that could take Bitcoin back towards 24, 30,000 area before, you know, maybe the next leg lower here in a C wave begins and Bitcoin continues to correct. I'm looking at the RSI here. You know, I have no encouragement really from it. It's sitting below the 40 line. It's kind of dragging along here on the weekly time frames. There is not a lot here to give me encouragement. That's true that you know, the slowing here you know, hasn't really come into the oversold territory, but it's not convincing. It's not a convincing divergence at the moment. So I continue to kind of be cautious on this, and I think kind of the final moves will come towards you know, anywhere between 11 to 13,000 into Bitcoin, as it will probably sell off into its final leg lower. Now you'll hear counts, and I talked about this in the previous update. You'll see counts regarding this being a wave A decline and a B, and then some kind of amazing C wave of a big expanded flat in here. I don't subscribe to that. I think that's completely out of proportion and not kind of following the right look in the Elliott wave structure. So you know, I don't think that that's a proper kind of interpretation of this decline. What's combining both those counts, right, either an ABC or a full impulse here with the correction, is that kind of overlapping of the next sequence, which in both cases will be to the upside, except that in this count it would be just a B wave, and in an ABC scenario it would be a wave 1 followed by a wave 2 and then a continuous move higher. And if that's the case, we'll switch it over. I don't think that there should be a fight between exactly what this is. You know, at a larger degree of trend. I think first of all we kind of have to clean up this impulsive decline, and then we can argue about if Bitcoin will make new all-time highs, or if Bitcoin will just kind of fall apart in a B wave rally in here. So we'll continue to kind of monitor that throughout the year. And looking at the monthly candles in here, again, there is not really a whole lot of encouragement from the way this market is setting up. Again, we're back near 40 on the RSI here on the monthly time frames, which should hold if this is a big low in Bitcoin. So that's a little bit of an encouragement. Back in 2019, we just kind of stopped shy of that 40 RSI, but in here it continues to kind of point lower. So I'll watch this definitely. But in terms of RSI is only important if it is followed by confirmation from the price. You got to get some kind of just kind of a technical formation, more of an inverted head and shoulder, let's say, or some kind of V shape, or maybe more of a candlestick type formation in here to some kind of let's say like a morning star, or you're getting some kind of a hammer, a bullish engulfing, doji, stuff like that can tell you that actually you're about to embark into something bullish. And for right now, the month of December, mind you, we're stuck within the highs and the lows of the month of November, but nothing bullish yet from from the price. Now, something that would be encouraging for the bulls would be if this month of January pushes higher and it becomes white, and then you're creating this pattern in here. Right, to me that would be a little bit more bullish, and if this turns out to be white, then I think you have a pretty decent reason to believe that this can continue higher towards its next kind of resistance zone back in there towards 28 to 30k. So that's kind of what I'm going to be watching for, some kind of a confirmation from price. You know, that's about it on Bitcoin, guys. Listen, if you wanted to kind of give my Pro Room a try, go ahead and, you know, take a look at that. Put this again in your browser and it will take you there. You can see kind of what we're all about. It's an awesome room. And thank you for watching. As always, I'll see you on the next video. Don't forget to subscribe and like. You know, Elliott Wave Cafe here on YouTube continues to grow. I thank, you know, each and every one of you for being a part of this journey with me. I appreciate you as always, and I will see you on the next one. Bye-bye.